Good evening. Pandemonium is a continuum. So is, Tamal, who I've known for donkey's years, has written this wonderful book. I don't know whether its pandemonium has stopped ongoing or we are right in the center of it. One thing I can say for sure is, you know how long you've been in conferencing business when you know everybody on the panel, not just everybody on the panel, you also know everybody in the audience. So you know that, you've been doing this for a very, very long time. It is indeed a pleasure and a privilege in this edition of Public Policy Forum and LITFest to feature a book called Pandemonium, the Great Indian Banking Tragedy, written by none other than Tamal. Tamal, as you know, has been writing this column called Bankers Trust Forever. And everybody who has anything to do with banking reads it, and anybody who has nothing to do with banking also reads it. It's a very compelling thing. My relationship with him goes beyond banking. I mean, we have a common interest in financial inclusion. And he's been involved with the Bandhan Bank, which was also leading in financial inclusion even in the earlier avatar. So welcome, Tamal, and welcome Shinjini Kumar, who's co-founder of Salt. She's also she's about the only one. That also tells me how old I am, because she's, a young one. And she's about the only one I don't know. I haven't met before, but pleasure to meet you online, Shinjini. And she's trying to build a fintech platform for women, which is extremely important and much neglected area. With all others, Shinjini will do a formal introduction, but Arijit Basu and I go back a long time. He's been a Scotch awarded. SS Mudra and I go back long back. He too has been a Scotch awardee. Mr. Sudarshan Sen and know each other since his RBI days. We also have fairly distinguished invited audience. We have Anil Bhardwaj, who's Secretary General FISME, Federation of Indian Small and Medium Enterprises. We have Rohit Vaswani, who heads Bharatiya Vitti Salakar Samiti. We have Nirmal Bansal, who's a former banker, and he's a distinguished fellow in Scotch Development Foundation. We have Gyanendra Keshi, who's editor of Scotch Group. And we have Yatish Rajawat, who is currently with Center for Innovation and Public Policy. With that, I hand over to Shinjini to take forward this evening. And we'll keep intervening and interjecting and troubling with questions.
Hi, everyone, and thank you so much for having me here. And even though, we haven't met, and I would like to feel very young being a startup founder. The fact of the matter is that I worked 30 years in India's financial services, so I've served my time. I know most gentlemen on this panel because of my previous professional relationships, and of course, Tamal because of what he writes and what he does for the banking system and for people like us. So let me introduce our distinguished panelists today. I'm starting with Mr. Arijit Basu. Mr. Basu is chairman of HDB Financial Services Limited, and he's a distinguished fellow of Scotch Development Foundation. He's a management leader and professional from banking and financial services industry. He was MD of SBI and headed SBI Life Insurance prior to that. He has worked in India, Japan, and the UK. He's a senior advisor and consultant to leading firms like AZB Partners, Deloitte India, and Life Insurance Corporation for their upcoming IPO. Mr. Mundra, I don't think he needs an introduction. He's former deputy governor of RBI. But just to recap, his banking career spans over 4 decades. He's held several important positions, including that of Executive Director of Union Bank of India, Chief Executive of Bank of Baroda, Baroda's European operations, among others. He also served as RBI's nominee on the Financial Stability Board, G20 Forum, and its various committees. He has served on many boards, including CCIL, CDSL, and PCI, to name a few. I'm really looking forward to talking to everybody here, but in particular to Mr. Sudarshan Sen, because we go back a long way from the time when I was a newbie in the Reserve Bank of India, and we lived in a building, a few blocks away in the Reserve Bank colony in Delhi, and very, very wonderful memories of our time there together. So Mr. Sen is a former executive director of Reserve Bank of India. not so long ago. So many of you might remember him from then. He was in charge of prudential regulation of banks, NBFCs, and asset reconstruction companies. Prior to this, he headed the RBI Department of Banking Regulation, and he was responsible for prudential regulation of commercial banks. He's currently an independent consultant on financial regulation and a financial stability advisor to the IMF. He's also an independent director on the board of a few financial services companies. This is quite a mouthful, ladies and gentlemen who are listening to me, these introductions. And I'm trying to not be intimidated because I have on my side Mr. Tamal Bandyopadhyay, who is in the center of this session today. Wonderful book. I do want, because we are talking about books and it is a LITFest, I want to show you the book. I hope everybody's bought it and read it. And it's a really, I found it a very, very interesting book to read because it sort of also reminded me of a lot of what has happened over my career in financial services and many of the, wheels within wheels that one tries to decode, and then you read the book and something occurs to you and you say, yeah, this is what was going on. So I hope other people have had similar moments while going through this book. So what I'm going to start with is I'm going to ask my fellow panelists here to ask one question each of Tamal. Either you can ask about the book, you can ask about the process of writing, but I think it's our opportunity to, we were talking before this panel, he has grilled everybody, so now it's time for him to be in that position. So yeah, who wants to go first? Let me ask Mr. Mundra, do you want to go first?
Thanks, Sinjini. I can make a beginning, no problem with that. In any case, we am Tamal and we have been interacting on and off on several forums. So again, thanks Scott, thanks Samir for providing this opportunity and to catch up with known faces, which otherwise had become difficult due to the pandemonium. As that was another, fallout of the pandemonium. Well, Tamal, I think there would be several questions for you. Despite my effort, I won't be able to keep this question short, so kindly bear with me. The title of your book is Pandemonium, the Great Indian Banking Tragedy. When you go through the book, it's not only about the banking. There is a tragedy in rating companies, there is tragedy in NBFCs, and beyond that, it covers several facets. So probably as a banker, I feel somewhere, kind of singled out in the title, but not in the narration. So maybe would be interesting to know that what was going on in your mind while giving this title. But beyond that, when we talk about banking tragedy and we are calling it a great banking tragedy, Indian banking tragedy, if I look around the universe in this world and many countries, including the developed countries, the countries which are similar to us, I don't think they are any of them are spared from this kind of events. Even the I would say intensity of events in many places must have been even more sharper than this. So why India and why Indian banking? That's the second point. Third, while we are talking about Indian banking tragedy, but when you live through the book, you will realize that the public sector banks have been, reserved for a special treatment in talking about this Indian great banking tragedy. Because, okay, they employ a market share, and because, India is one of the few countries where there is a large banking in the public sector. But I don't think that the banks elsewhere, where in public sector or private sector, have covered themselves with glory. So to sum up, if I look at it, I think there were 4 issues which were broadly brought about the banking sector. So corruption, inefficiency, capital, and continuity of the leadership. Okay, as far as first 2 are concerned, I think events have unfolded themselves. We all are greatly wiser about it, that when we talk about the corruption and inefficiency, where the bar is placed at various places, I won't go into that. I do admit capital and continuity of management had been issues. And maybe, you know, there had been discussion, there had been perception about it. But now, of course, we have written an epilogue to book also, which, you know, allowed you some time to reflect back. And after the passage of 1 year, and quite a few things, other things have happened. So, would you be still holding the same view, which was not you never, I mean to say, it was a cleverly written book where you brought out different viewpoint without giving any of your specific viewpoint, but you get the reference from it. So would you be still holding the same view, or there had been a change in perception or view? So this is the question I wanted to ask you in the beginning, and seek the forbearance of my fellow panelists for putting this very long-winded question to you. Over to you.
Thank you, Mundra Saab. I think you always quite true to your words, because you did say that you will grill, and that's what you are doing. Normally, when SS Mundra is on a panel, people look for more for your, sense of humor and those kind of stuff. But now you are dead serious, and you are just firing at me because you were both a commercial banker and a central banker, and part of the tragedy unfolded before you, because when Reserve Bank of India was holding this unique AQR asset quality review, you were the deputy governor RBI, and you are intensely involved. So let's not get into it. So in retrospect, I could have actually made it a great Indian banking comedy. And trust to me, I'm not joking. It is actually a comedy, because if you look at this, despite all this commitment by the government in terms of giving capital and everything else, when you see the gap between the one chairman or one MD goes out of the corner room, and second MD comes sometime almost after a year. So those kind of things, or how the some parts of corporate India took bankers for a ride. No, essentially they were not bringing equity on the table. They are using bank money as equity. So those, if you look at those kind of things, given a choice, I would have renamed this as a great Indian banking comedy, and probably that would have made many bankers happy. That's that's a part one. Part two: why am banking? Why am I picking up the banks? Because if it's a tragedy, it's everybody else is involved. You spoke about the rating agencies, the non-banking finance companies, and so on. Because India is a bank-led financial system. Nowhere, very few countries we have this kind of dominance, even though we have been talking about corporate bond over the past 2 decades. But as we speak, only during, for the past 1 year or so, we are finding greater disintermediation. All kind of entities are getting into the markets, both in terms of raising deposits, the liabilities on over platforms, as well as giving loans, etc., etc. But still, India is primarily a bank-led economy, which is why obviously banks come there. So that's the second part of it. I am not a person who is opinionated. Normally, I leave it to others to make their judgment. I think because I'm not a creative writer. I'm a journalist who has got into writing, and it's a sort of addiction. So between 2009 November, when my first book was launched by then Finance Minister, and 2020 November, when this book was launched, I ended up writing 6 books in 8 years. So it's a sort of addiction, but all are journalistic writing. So and as a true, I feel I don't belong to that camp where I want to have an opinion and will force you to be in sync with me. I think as a journalist, my job is to offer different perspectives to you, and this book also an attempt to do that. I have tried to look at it. It gives you a sort of a fly on the wall narration, as well as a bird's eye view. And I have spoken to, I don't know, 100 plus, definitely 3-digit people from among economists, among bond dealers, among lawyers, among investigative agencies, commercial bankers, investment bankers, central bankers, you name it. And it's a sort of, my way of putting different perspective. And at the end of the day, the reader would take a call, what exactly has gone right or gone wrong. And trust you me, I don't think I have any bias against the public sector banks. Many people feel that way, but it's not. I mean, they are like, you tie their hands from behind and you ask them to work. There are many constraints, and those constraints are graphically described. So there is no blame game at all. And also, I don't agree with you, sir, that I have picked up only private sector bank for weeping, because there is a full chapter on what Chanda Kochar has done in ICICI Bank and what is the Yes Bank story. So there is no bias, there is no preconceived notion, there is no targeting. What I tried to project is what exactly happened in Indian banks and why it has happened, and is there any way we can do the course correction. Yes, am I an expert? I'm not an expert. Can I claim that this is a definitive and authoritative book? No, it's just an attempt by a financial journalist who has been tracking the sector, even though Samir Saab made me a sort of Harappa Mohenjo-daro civilization as old as it. But I, not exactly that. I started bank reporting in 1995. So about 25 years, 2.5 decades, by accident, I got into bank reporting. And over a period of time, as I said, from 1995 till 2020, the way I have seen the Indian banks evolution, the way I have seen the dramatic, the personalities they worked, that's what I tried to project. That's what I tried to narrate. I don't claim that I have been able to. What I can claim is this: there is no agenda, and I have done with absolutely only way to project what has happened. But I don't claim that it's a successful narration. You can always find fault, and I definitely don't have the last word, because being a central banker and commercial banker, you or Mr. Basu, being a managing director of India's largest lender, or the third gentleman, Sudarshan Sen, ED of Reserve Bank of India, I know you three, apart from others, know much more than what the book contains, and you are welcome to judge whether I have done it reasonably well or I have failed. Thank you, sir.
Wow. That was, sir, do you want to respond to something? I feel like we don't have enough time for...
I won't do that. But then it will be reduced to a dialogue. And but since you have asked me, I would just say one thing. Bird's eye view has one dimension, worm's eye view has another dimension. So let's try to mix both the dimensions. Okay. Back to you.
Okay. So, I'll say one thing. I spoke to Tamal about this book at another LITFest, and I was really interested and curious about the literary aspects of it. The fact that he talks about the bird's eye view or the fly on the wall. He calls it the great banking tragedy. Through the book, he references to, character flaws and things like that. So I want to draw in Mr. Sen to ask the next question of Tamal, because I know that he also has a huge interest in, all things other than just banking. So we had a very good banking question and a very solid, sort of dialogue there. So next question.
Okay. First of all, thanks to the Scotch Foundation for, inviting me to share this forum. It's very exciting. I really enjoyed reading Tamal's book. Tamal, I must congratulate you. I mean, I loved reading this book. I mean, keeping all opinions aside, I mean, it was a good read, and albeit a thick one. Okay, so some of my reactions on reading your book, I found it very hard-hitting. I found it very graphic. It reflected a lot of painstaking research and lays bare weaknesses in the system with a brutal frankness, which I think is possibly a trademark of yours. So my question to you, Tamal, is, banking is typically a very opaque business, especially the relationships between banker and borrower, or between banker and regulator or supervisor. These are typically opaque. But the way you have put in some of these anecdotes, you seem to have pierced through this opaqueness. So I am curious, how did you manage to do that? If you don't mind sharing a trade secret.
Okay, Mr. Okay, I don't think there's any secret about it. As I said, I'm not an expert. As a writer, my focus is to tell a story, and that story I tried through all my books. I have done that. In fact, one of my previous books, which got into some litigation, Sahara: The Untold Story, where the Sahara India Paribar filed a 200 crore suit against me. There, I graphically describe what exactly happened, with SEBI and Reserve Bank of India. These are all closed room happening, but I wrote in such a way as if I'm an eyewitness. I am also, in all my books, and in this book too, I have done that. Be it AQR, what Reserve Bank of India, why, how it was done, how it was operational not from the RBI central office, but actually the Cup Parade office, and what kind of snacks with tea and coffee your colleagues used to have in the evening while discussing and following the AQR. As if I was present there. And that's true also when Mr. Mundra and then RBI governor and the team went and took a flight and met then Finance Minister Arun Jaitley and explained to them as if I was there. So there is no trade secret. Actually, it's as a journalist, I need to know people, and trust me, while you cover banking, it's like you also need to be like a banker, in the sense trust is the main important, the crux of it. To be a journalist, which means you don't trade information, and the other side actually feel very secured with you, very comfortable with you. So once you make this, once you create this comfort, then I think things are fall in place. As I said, probably 100 people more I have spoken to. I did speak to former RBI governor, that's on record, but rest of them are everything off record. And what we start is basically, probably we start with 0 or with 5%. And then with that 5% arbitraging that, I get into that 10%. And then from 10% to 15%, then 20%. And then probably I end up getting 80, 90% of the event. And it's not one source based, it's multiple source based. So again, to give you a simple example, as a reporter, what do I do? Suppose a real estate company had a board meeting. I don't know what exactly is the board meeting, but I know the board members. And it's not a listed entity, so it's not in the public domain what's the board meeting. But I have a feeling probably this real estate company had this kind of land in Mumbai, which could be sold, which is they're planning to sell off because it's not in a good health kind of thing. I had heard it. It's a gossip. But then what happened at the end of the board meeting, when I keep a tab and the board meeting gets over, I just pick up the phone and talk to one person, congratulations. And that person said, what for? I said, look, finally you could do it. Then he said, oh God, how do you know it? Yes, we have done it, but I wish we could have got a better pricing. And then, so I got this, my 5%. So I go to the second person, sir, you are selling this land, but such a fantastic land person, why are you selling so cheap? Then he said, who told you so cheap? This is the price. We could have waited, but the problem, we need the money now. Isn't it 600 crore enough? From 5%, I jump to 20%. Then I go to the third person, that 600 crore. I don't know the full story. When it is getting who is the buyer? I said 600 crore, but shouldn't you have gone for an auction? So like that, in the next half an hour or 1 hour, I probably would have spoken up to 10 persons involved in the thing, and I get 80% of the story. And I write it in such a way, probably I was a part of the board meeting, you will feel that. That was for writing a story during my reporting days, I used to do that. And now the same strategy or the trade secret that you have called it, I follow for my books. Because my objective is to tell a story free of jargons, which will be understood by not the bankers alone, by doctors, by lawyers, by students, by homemakers, so on and so forth. And to do that, so this SLR, CRR, and LCR, these are all jargon. Nobody will touch my book. So, my objective is to write a story, and I need to know the story. And to get to know the story, I need to know the people, and I need to create a trust. As I said, like a banker or like a bank, for a financial journalist also, trust is the key word. Then is the Khulja Sim Sim, all doors will open.
What
Over
a
a
fantastic exploration, Tamal. That is such a wonderful question and a wonderful answer to that. I have to say this. I must be one of the few people in the country or in the world who studied English literature and journalism and ended up in the central bank. And the question and the answer that we just went through reminded me of this, because as a journalist, like Tamal just very wonderfully described, gossip is your mainstay of life. Like you just have to have all your senses open to everything that's gossip, that's not confirmed news, but may become, like he just described. As a central banker, after that, I went straight, and I was very young, and I went straight into the central bank. And the central bank, in many ways, is exactly the reverse. You are constantly told to not give credence to gossip to some extent, because you're so fact driven and verification driven and triangulation driven. And so I think your method becomes different, right? You introduce a method which cannot be the method that Tamal just described of calling somebody and saying, congratulations. So this is like just such a wonderful thing. And even in the book, the way you talk about the whole, and I have a question later on this for actually Mr. Sen, but I'll come back to that. I'm going to ask Mr. Basu to ask his question, and because I think you've been lucky that you were not picked for the cover. It's the Great Indian Banking Tragedy, not the Great Indian Financial Institution Tragedy yet. Maybe that's the next one coming. I don't know.
Thank you so much, Shinjini. And it's a real pleasure to be on this panel. Thanks to Scotch Foundation and Tamal Bandyopadhyay for inviting me. Like you, this is the second occasion when I have been on a panel with him after the book has been released. And in fact, before I ask my question, on this, Mr. Sen asked a very interesting question. And how do you actually cull information? And one of the things that we had to practice at the senior level in SBI is to have a connect with some of the media people, including Mr. Bandyopadhyay, and make sure that we say nothing. So maybe while he has connected to me on various issues, I have not been the person he has asked. Because at the end of the day, we would always scratch our heads and make sure that we have said a lot to whoever it is in the TV media or in the press and actually said nothing. And Reserve Bank, of course, has to master that, without which it becomes very difficult. But Mr. Bandyopadhyay, if I may, I'll come back to a little more mundane banking related question. So again, hats off. This is a very, very readable book, very enjoyable. But there is one section on which you talk about, the excesses of lending. I think, if I remember, you have used the word zombie lending and compared it to Japan and things like that, and also alluded to evergreening. There was a time when what the banks were supposedly doing was extending the loans when the banks fully knew that this is something which should have been called out. Right. Now, my question is around this. So if you would agree, this huge rise in corporate lending, project finance, high value corporate lending, which actually unraveled. India has always had, MSME has had its pockets of NPA, agriculture. And if you compare the ratios, it is not very different. The difference is that there were a large number of loans post, around the time the world global crisis happened. And, and we kept on lending to infrastructure, and for various reasons, banking deficiencies included, they unraveled, and which hit the banks from 2014 till now, we are slowly coming about. But when we talk of evergreening, would the ecosystem have permitted the banks to do something very significantly different? That is the question we in the banks have always debated. So we have had various mechanisms, DRT, this, that, and including SARFAESI. And almost everything till IBC came about, and why IBC is, as you know, is being appreciated by everyone, is not just because of its success or failure. I have personally witnessed it, and the change in the attitude of borrowers and the change in the way the banks can speak to the borrowers has undergone a sea change, which was actually not available to the banks prior to this. And your book actually basically talks of this period when perhaps banks should have done something better. Now, on this issue, RBI did its AQR and followed it up, knowing fully well, RBI, I believe, was working with the government at that time to bring in the IBC quickly, and the so-called first 12 accounts were. So without this backup, what is it that banks could have really done differently, other than not lending for infrastructure at all?
Okay.
That
No,
is my
Mr. Basu, there is a entire chapter on IBC, and you rightly said that this was one legislation. It happened very fast, and then that gave it actually coincided with AQR, so that bank got a dustbin. If I say what I was saying, this basically bankers were doing belly dancing, and then Raghuram Rajan forced them to do a striptease. Okay, so that's the kind of scenario. Now, could have been your question, if I am got it correctly, that because there was no IBC there, what could the banks have done? What is the other way? Definitely, you had your compulsions, because had you acknowledged the bad loans, then you had to provide for. When you say, I'm saying you, meaning the banking system, not any particular bank. And then the provision would have eroded your capital, and the government was not forthcoming on capital. Government came into this huge declaration of capital, lump of capital, only post AQR around the same time. So IBC, AQR, and the government's 2 trillion plus recapitalization announcement all happened together. So I think the bankers were little apprehensive that where the capital come from. And then I will get into this RBI trap of lending bar, so on and so forth. The PCA, prompt corrective action. This is one way of looking at it. And indeed, there was what happened is this. There was a pressure on the banking system to lend post Lehman crisis. And then we saw the second phase of UPA government, a kind of inertia. Everything came to a standstill. The litigations everywhere, be it land, be it everything else. All those kind of things are there. But simultaneously also we found the bankers, particularly the public sector bankers' obsession for balance sheet growth, the hard mentality. The State Bank of India's balance sheet strength and the risk-taking ability is very different from a small, from a bank which is probably 1/15th or 1/20th of its size, okay, in the public sector. But if you look at the balance sheet of the banks at that point of time, you will find the smaller the bank, the bigger the size of the corporate loan, right? So I don't think there is much of excuse to say that, look, what do we do? There was no dustbin at that point of time. Why would have thrown the kachra? We had to stomach it. No, that's nothing. I think part of it, at least, apart from everything else, that there is no guarantee that where the capital would come from. There is pressure from different quarters to lend, and there are inertia in the second UPA government. Things were not moving. There are a lot of litigation. The bankers' obsession for growth and the herd mentality also responsible for this. And there was a McKinsey study which I mentioned in this. The smaller the size of the bank, the bigger the corporate loan book. And in many cases, your subsidiary, SBI caps, were actually appraising it. And SBI cap is a appraiser of a project, and SBI takes a part of it as the syndicated loan. Then everybody else, that's a ticket, because SBI is taking it. It can't be a bad loan. It's a good company. Let's get it. And trust you me, if you go through the loan appraisal documents, which I have, it is done by different banks, but only the first page is different. The rest of them, that's the bank stamp and the bank's name and the exposure, but the rest of it is the same. So the bankers did not apply their risk management mechanism at that point of time. It was a hard mentality. And to some extent, of course, SBI cap its own defense. Your own subsidy, you provoked me. It also played a role.
I was just thinking that. I was just thinking that Mr. Basu asked that question. Yeah.
No, I've reached out to SBI caps. I have reached out to two SBI chairman, Ms. Arundhati madam, as well as her successor. And I have got them on record their defense on the SBI caps role. But it was not as simple or the way you look at it. I think it's much more complex. There are many contributing factors.
Yeah, I fully agree. I'll just intervene for a second. Obviously this cannot be a debate on that, and I will hold views which are different from Mr. Bandopadhyay. Just an interesting anecdote on the SBI cap. So when I became MD of SBI, there's an interview panel, and Mr. Vishwanathan, the RBI governor, and I was then the MD of SBI Life. And I was expecting a question on stressed asset, obviously. But suddenly, out of the blue, he asked me that exactly what Mr. Bandopadhyay is saying, that SBI caps is responsible for everything. And I attribute getting my MD-ship to that answer that I gave. I spoke for 15 minutes and I realized that obviously I know SBI caps as a SBI system, and I defended them. Maybe over a cup of tea, we will sit with Mr. Bandopadhyay and I'll again, strongly defend what SBI cap has done. No, but that is on a lighter note. But I get what Mr. Bandopadhyay is saying about the mistakes. There are various versions to it. And yes.
I will recommend that you have that coffee or tea, because you have to compensate for all those meetings where you spoke for a long time and did not give out any facts.
Yes.
You should actually do that meeting. You know what? I actually want Mr. Mundra to respond to that question, because of course Tamal is in the position. See, that the good thing about hindsight is that it's always 2020, right? So when you are going back and looking at something, of course, it's clear as daylight. One of the things I did in my central banking career was look at forex derivatives portfolios of banks, and exactly what Tamal said. The big bank would create a structure. In those days, Standard Chartered Standard Chartered would create a structure. And pretty much most Indian banks would take the exact same term sheet with no change at all in that term sheet and go and sell that structure to people without really, thinking about any of this. And of course, that led to a lot of reform from the RBI side, and a lot of stuff happened in that time. But I think what Tamal is talking about in the credit side has been a story with its ups and downs and various things that have happened on the way. A lot of reform has happened as well. So my question to Mr. Mundra is relating to how has that progress been? And the truth obviously is somewhere in between what Mr. Basu is saying and what Mr. Bandopadhyay is saying. But Mr. Mundra gets to give us the inside view of how he saw this.
Thanks for it. As always, glass is either half full or half empty. Is always situation like this. Slight difference here. These were all children of a same parent, so level of trust was higher than that. Having said that, I'm not denying all that. Yes, something done by SBI, there was a lot of level of confidence, but this is just a very small part of whole thing. Let's try to understand what happened. Let's go back to that period. Okay, there was a global crisis and there was a huge liquidity available. As is being told that banks were trying to increase their balance sheet and a lot of lending was being done. It's very difficult today. We can talk about it, live through those moments. There was a lot of liquidity in the system. Infrastructure financing was something new which had come on the block. In the earlier phase of infrastructure financing, it was a good success. Projects were financed. They were giving the good cash flow. They were repaid. Economy was growing at 8-9%, and there was a huge confidence that the growth going to be double digit.
Yeah.
These were, all the factors which were there prevailing at that point of time. Now, having, ultimately, you do certain projections as a banker, you look at the past, then you look at the future, try to make a rational assumption. Okay. So that was the background. And of course, it was an easy way for any banker to increase the balance sheet, but which was looking almost, that there was no risk involved with good business. You can increase the book, you earn the good margin, there is a good repayment history, which you have seen. You have a lot of liquidity, which otherwise you don't know where to use it. So this was the milieu at that point of time. First, let us understand that. Even then, after that, okay, so many things happened, the growth slide down, but 3-4 major events happened, right? Your telecom license cancellation, your coal block cancellation, many mining were cancelled, right? And then the getting green clearance became a big hurdle for the reasons we all know. Now, these are all the basic ingredients of any large project or any infrastructure project. And that is where the balance sheet was growing. And that is the area where all these external events happened. Now, bankers were in a particular situation. And let me add here, it was not only with the public sector banks. There were private sector banks who also chose to go the same line of business. Sorry. And they ended up in the same situation. The only difference was the capital, as I mentioned in my opening question to Tamal. While they were quick to get into it, they had the ability to quickly get out of it. Public sector banks didn't have that choice or that luxury. That was one dimension. And as Mr. Basu rightly mentioned, there were not many avenues. It's good to say that there was DRT, there is SURFACE, we know, and we go back to BIFR. So all these avenues were known that what is going to be the end result of this. Even when IBC has come and you see the initial phase of IBC, what was the perceived time which should have taken and what ultimately it took. It is yet to settle down. So these were all known facts. And that being the case, I think any banker worth his salt would be the first attempt to see that the account remains operative, project survives, and there is always an expectation that today cash flow is not there, tomorrow the cash flow will come. So to attribute that everything was just an attempt to camouflage and pass the time, it is not. I'm not telling that there were not such attempts. There might have been attempts, there might have been attempt of malified intention. A small percentage would always be there. But largely, it was all with the good intention of allowing the project to survive. A survival of project is not only the promoter's survival. There is a whole ecosystem around a project. There are thousands of families who are surviving on the system. There is a whole ecosystem of suppliers, MSME, retailers. So, a banker's viewpoint is always driven by that. Today, it is easy to pass the judgment and just pick up one side, that is convenient for our argument and completely forget the other side. So I think I have comprehensively addressed what you wanted to ask me. Thank you.
Sir, I have one more question, follow-up question actually of you. But what I'm going to come back to that, because I think what you have expressed, sort of, I can relate to that very well for the time period after, the great economic growth and then all the problems coming on the heels of that. And that period, I can excess liquidity, and I can relate to that. But I do want to ask you a question about what happened after that, around the time that you start to do the AQRs and you are at the RBI. But I'll park that question right now, because there is a gentleman, Mr. Vaswani, who is an invited guest of Mr. Kocher, and he wants to ask a question of Tamal. So, and he has to leave. So I will bring him in to ask that question, and then we will come back to this wonderful discussion that we are having about this book. Mr. Vaswani, are you there?
Yes. Can you hear me?
Why don't you ask? Yes.
Yes. Good evening to everyone. And really, I'm enjoying this discussion. And the topic like this, technical issue with this humor, it makes more interesting on the issue. And regarding the book, I was reading about this. And the book with, so many diagnosis, as he has honestly accepted also, Mr. Tamal. There are a lot of diagnoses and About the prescription, he didn't talk much about in the initial remarks, but I found that there are prescriptions also. My small question to Tamal is, the way you have highlighted the issues like zombie lenders and zombie borrowers. My question is that would you see that this immature equity market is overburdening the banking system in India? And there has the zombie borrowers. Where will they go? Either they will die, and it is not only that the zombie borrowers are coming. Certainly, there is a lot number of percentage which are going revival also. So, do you think that it is lack of the other alternatives or the equity market which is making it more burdensome? Tamal.
No, if I've understood you correctly, I'm coming back to that. But before that, I just want to make one comment. No offense intended. What Mundra Sahab was talking about, I exactly dealt with this, and I called it hope banking. Hope banking. Okay. So there's a different dimension among the public sector bank. One is hope banking, other is brotherhood banking. Essentially at the top end, I come from bank A to bank B, and I carry the borrowers from bank A to bank B. And I with keeping my eyes closed, I go ahead with this. Another part. So both brotherhood banking and hope banking also contributed to this mess. Okay. And Mr. Vaswani, I'm not, if I've got it correctly, as I started saying that India is a bank-led system. So essentially the banking sector, the onus was on the banking sector to meet the credit requirement of corporate India, be it infrastructure and be it something else. But I think now things have started changing now, and particularly the past 2 years. One is this: we have seen the kind of deleveraging by the large corporations. That's one part of it, and second part of it. The corporate bond market, which is definitely now more in terms of size is growing than what it was. And then, of course, the equity market, which now the companies are raising money from the equity. So to that extent, I don't think we will ever see the kind of credit growth that we had seen in like, for instance, when Dr. Reddy was RBI governor, I'm talking about between 2005 and 2006 and 2007, for 3 consecutive years, our credit growth was more than 3 times than the GDP growth. So ballpark figure says that the best case scenario is the 3 times GDP. If more than that, there's an excess, which is why many feel that during Dr. Reddy's regime, there was an excess, the so-called irrational exuberance, 28-30% credit growth. And now we have been talking about 5%, 6% credit growth. So we will never go back to this 28-30% or 20% or even 15% probably, because while it is correct that India economy is primarily, we have a bank-led system, but of late we are seeing the other constituencies coming in, and avenues are opening up to raise money for corporate India, for MSMEs, for SMEs, because we have the MSME and the SME IPO also, that where the BSE, there are many companies raising money from there. They don't make much noise, but they are doing. And also the way the equity market and the IPOs are happening. So if you are asking that, so on the one hand, things have changed. On the one hand, bankers have become much more circumspect. They have become, I would say that they care for much more risk, their risk management skill, etc. They have been continuously honing. They are not, that hard mentality is no more there. That the obsession for balance sheet growth is no more there. They have learn their lessons. So they are much more judicious, much more circumspect, I would say much more efficient. And they look at this in a different way than they used to look at it till 2015. So that's the big positive as far as banking system is concerned. And on the other side, the borrowers are seeing different avenues to raise money. Thank you.
Well, I had a question follow-up to that.
Sir.
If I'm allowed.
Yeah, yes, yeah. I mean, it's, yeah.
Yatish here. You've always been very lucid and very clear in your writings. And one issue that I have seen rarely been reflected upon, at least in the in the journalists who write about banking, is that and you've explained and defined the problem in your book very well. But at the end of the day, two or three things happened because of this morass or this, I could say the pandemonium in the banking sector, was that the competitiveness of Indian industry, particularly the MSME, suffered badly, in the sense that if your cost of capital is at 12 to 14%, automatically your net margin as an industry or a businessman suffers. And this hollowing out of the MSME, which was in a bank-led finance economy, is still existing. One. Second, in spite of repeated effort by the government and the ministries to open up the sector to new entrants, there is always this, I would say, fear which is created by the incumbent lobby of bankers and I would say regulators that new entrants will come with baggage of corporate, they should not be allowed in. I mean, Raghuram Rajan said one thing about differentiated banking when he was a governor, and he says another thing when he is now no longer the governor. Nachiket More committee said that differentiated banking should happen. We have a paper now which says that digital banking should be allowed. But again, the incumbent bankers raised this bogey about the fear of big tech and fear of new entrants. Why is there I don't see a lot of people writing about it, and I don't see this discussed about that this incumbent banking system has prevented the growth of not only our economy, but has raised cost of capital, has prevented access to capital, and has to be broken down by the entry of new entrants who are sitting on new technology and are able to expand both the market and the deposit base. I mean, isn't that a problem that we should be discussing more often in our debates in newspapers or in your columns or anywhere else,
Yeah, Mr. Bastani, I think that's, I would have come to that in the way forward section. So I think that's a good point. But yeah, Tamal, do you want to respond to that?
Quickly. The second part, that MSME is not well catered to by the banking system. I think things are changing. Problem was that the banking system, the way of appreciating the proposals and managing risk for a sector which is basically a cash flow based, bankers are not prepared for that. It's now changing. Bankers are honing up their skill, and also GST, etc. Things have changed for the MSME segment. Now they are now come back with their proposal with backed by data and other stuff. So with this and of course the continuous support by the government during the COVID period also, particularly we had seen that. So I think the bankers' approach to MSME has changed. I think for the first time, probably if I'm not mistaken, is this they are treating this not as a compulsion, as a business opportunity. They can lend money and they can recover money. It's a business opportunity. Typically, what happens under this so-called priority sector lending, you always see as a compulsion, not as a business. But I think the banking system is seeing, because MSME segment is changing and GST also playing a very critical role there. So that's the MSME part. Second part is RBI ultra conservative. RBI is not opening up. I think Mr. Sudarshan Sen and Munga Saab probably will be a better position. But my understanding is the following. You go back 1993-94, we got 10 banks. Not everyone survived. Then we had to wait 10 more years. 2003-4, we got 2 banks. That's Yes and Kotak Bank. Then we had to wait for another 11 years. 2015, we got 2 banks, Bandhan Bank and IDFC Bank. At the same time, we had got 10 SFBs, 10 small finance bank, and a few payments bank. You spoke about differentiated licensing during the Raghuram Rajan period. So suddenly, between 1994 until 2014, we had just got only 12 banks. But in 2015-16, so we ended up getting 10 plus 2, 12 in the 2 years time, 2 universal bank, 10 small finance bank, and few payments bank. Now, payments bank experiment has failed. I think we admit it or not, that's very, very clear, because we don't need payments bank. What can they do which the universal banks cannot do? And then subsequently, Reserve Bank of India has opened up this thing on tap. So there are applicants both for SFBs and universal banks. I think the problem is RBI. I'm not very sure whether the incumbents are creating a barrier. I think Reserve Bank of India does not want to make any mistake, because what happened to Yes Bank and what happened to Ramesh Geli and some of the entities which not fit and proper. So I think it's now thinking twice, thrice, four times who to give the license. That's more. And I agree with you. We need more banks. Will the corporations be allowed to banking? I'm not very sure we have the answer as yet, because there is no uniform rule. Globally, you will find Japan, one country where all the electronic goods manufacturers running banks, or some of them, but US no to it. So there is globally, there is no uniform rule. But more importantly is RBI, you always run the risk of the corporations outsmarting the regulator. So I think RBI needs to reorganize itself before thinking whether corporations should be allowed or not.
Okay.
Yeah.
Wonderful. Thank you. So we have about 35 minutes. And if we talk about corporate entry into banking, then we will not move ahead at all,
Yes.
because we all know where that is going to go. So I'm just going to take the liberty of not taking forward the discussion on corporate licensing. But I do want to ask the question, the very relevant question that Mr. Vaswani asked about the short supply of banks. And Tamal, when you say that, yes, RBI wants to be excessively careful in the selection so that the mistakes are not repeated, but the more short the supply, the higher the chances of the risk building up into the system. And then, it becomes a harder and harder decision. So sometimes that can play up as well. I want to just break this seriousness for a little bit and ask Mr. Mundra a slightly personal question, and then I'll move to the other panelists. And that is relating to what you were saying previously, that you do understand that empathy that you have for bankers, and then you go and become a deputy governor at RBI and you have to do AQR and you have to go and ask them these questions. And the book title is Tamal draws a lot from Shakespeare, and he talks about heroes, and how does that feel like personally? Like, what does that feel like?
Okay, since you said, I think let us break the seriousness. So I would say, all of us, we are familiar with the Ramayana and Ramcharitmanas, and then the Bibhishan in Lanka. The role of Bibhishan in Lanka was very, very important. So I think when I went from as a commercial banker to RBI, I drew a lot of inspiration from the character of Bibhishan. Not to say that RBI was Lanka. That is just, incidentally, RBI was not a Lanka, but so that is to answer your question in a very short. I think as far as what Tamal was mentioning and you wanted to ask me, you have not repeated that question. You have reserved it, but I think you have shelved it now. But nonetheless, because there are certain comments which Tamal has attributed to me in the book, which are already there. I won't own or disown those comments. That's a different thing. But I would very simply say I had two viewpoints. One, I say that we should not be in a situation where operation is successful and patient is dead. This is how I used to always say. Even in RBI, sometimes I use this phrase. And second thing, Kamal's column is very, popular column, Bankers Trust. I used to say have some trust in bankers also. So that's it. Thank you.
Trust the bankers. Okay, that's a good one. Very good. So, Mr. Sen, there was is RBI Lanka? No, it's not. I think that disclaimer has been given. But tell me one thing again, as a individual, I think a lot of the book is about malintent. So some of it is, of course, sequentially how the economy came, the liquidity, global crisis, and all of that is understandable. That's one part of the story. But the book has this equal thread running through it, which is about bad intent, people, bad actors, not just failure of process, but actual lack of implementation of things. So would you like to respond to that? Like, how are you in that system where sometimes you have a sense or you can see that things are not exactly like who didn't know about what was going on with Rana Kapoor, or like how much do people know and how much do they ignore? How does it work?
See, first of all, let me say one thing. Having been a former supervisor and now also on the other side on being on the board of a bank, I don't think the entire banking system has stumbled and succumbed to frauds.
No.
The vast majority of bankers are not fraudsters. They work diligently with their heads and hearts in the right place. Their work goes unheralded and unsung. However, yes, there are instances when bad actors emerge, and when these hit the headlines, there is pandemonium. But with apologies to Tamal, it is not necessarily a banking tragedy. There are these small, I will say, accidents which happen, some of them prominent accidents and less prominent accidents, but it does not take on the whole, the dimensions of a Shakespearean the tragedy. And I think one of the things which I have seen as both from outside and within is that it is the weakness in the three lines of defense that often facilitate and encourage fraudsters. Internal controls, risk management processes, audit, these are just today not smart enough. They are not comprehensive enough, and they are not nimble and adaptive enough to handle the challenges before them. Now, in a lighter vein, I would say that when I was a young supervisor in my, I think, early 30s, if I discovered a fraud when I was inspecting a bank, which I never did, I would be considered an ace inspector. But unearthing frauds is not the main purpose of a bank inspection. The Reserve Bank's supervision of fraud banks is not an audit. Many people call it an audit, but they make a mistake. It is not an audit. It is a sample-based approach, always has been. And it's definitely not a transaction audit. The emphasis is, and as it should be, more on evaluating systems, controls, and processes to manage risk. Because the primary responsibility of managing risk is not that of the regulator and supervisor, it is that of the bank. It's the regulators and supervisors' job to ensure that these guys are doing their job properly. And one more thing, why do we get so het up about frauds? As we pointed out, frauds happen in all aspects of commercial life, not just confined to banking. And let us remember that fraudsters are innovators. And it's a truism that innovation is always one step ahead of controls and supervision. So let us not be surprised when frauds happen. Frauds will continue to happen. So even if the banking supervisor is alert and competent, frauds will happen. So what should we do? I think we need to make the system less fraud prone. We need to critically evaluate how strong our lines of defense are, and ensure how we can strengthen them, how we can adapt them, how we can improve them. And this has to be a continuous process. And therefore, in Tamal's book, somewhere, I think Tamal has written that, RBI needs to go back to on-site inspection more than it has been. Under the risk-based supervision, it has moved too much in the direction of off-site and gone away from on-site. But let us recognize one thing. In the days when I went on-site to a bank to inspect it, the ledger was lying in a big fat book on the table of some banker. The loan documents were lying in the cupboard. The various whatever was happening in the branch was confined to the branch, and I could not sit at the head office and look at it. But today things have changed. The way information is stored electronically makes it possible, using the right technology, the right mindset, the right investigative and curious approach, to identify things, to identify anomalies, and so on and so forth. So I think the way ahead is basically we have to work smarter, we have to be more efficient and intelligent. We need to use our resources very carefully because they are not infinite. And bankers and supervisors really have to work together with mutual support and with very clear purpose, and make life more difficult for a would-be fraudster. I'll stop.
Yeah, trust and move ahead. I think, Mr. Kochar, you'll have to have a one-day discussion, because everything in this book seems to have, views on both
barely
sides.
scratching the surface of the book.
But very good. Obviously, very good points there. It is not the regulator's job to implement systems and controls in a regulated entity, but if your job is to make sure that they do it and it doesn't get done, then how much of that blame gets apportioned to you? And I think that's where Tamal may have looked at it in one way, and we are looking at it right now in our responses in another way. And those are all the interesting things that we will continue to talk about. But I do want to, get Mr. Basu in, because I think I'm afraid he must be already attending another meeting on another device by now, because I have not.
Oh, I'm still there.
Okay, thank you. So I wanted to actually ask you something which came up in the previous conversation, which was about capital providers. So, there was a question about equity versus debt versus primary capital providers being banks. So one of the reasons Tamal holds banks accountable is because they are the primary source of capital. And then you think about the SMEs, and all of those things are related to each other. The question I want to ask you, what is the role that non-banks play in this? And that's another sector that we have seen go through like a huge sort of evolution of different types. Where do you see that going now, like future forward?
Yeah, so I think a very valid question, and very relevant to the book also, because I think the way I understood the intent of the book, at least, was to highlight what Mr. Bandyopadhyay felt was wrong, and what could be the way forward. And very clearly in India, we have the NBFCs, and I'm very happy that, number one, they are not called shadow banks, as they are in some of the other countries.
But even here, we keep the media, that's Tamal's responsibility. The media always says shadow banks.
Yeah, this is the media which is inspired by reading the foreign press. But within the country, they are normally referred to as NBFCs, somehow even in the electronic media and stuff like that. But when you are seeing a Bloomberg or a Reuters who have to use terms which are familiar to their audience overseas, they use shadow banks. Now, the growth of the so-called NBFCs have actually accelerated over the last 4 or 5 years. And now why that has happened is they fill in an area where banks would find it difficult to reach. Very clearly, I can take the example. I am currently in an NBFC. A banker's job is, you want to be a top-class bank, other than the public sector banks who have a social commitment. So we have a commitment to the poor, irrespective of, the outcome in terms of stressed assets from that section. But having managed that, the corporate lending or the retail lending, we are free to do anything and we can still be commercially viable. Private sector banks even have their only commitment to the shareholder, right? And rightly so. They are, and in that scenario, their risk mitigation measures will be very, very fine. Today, everyone is able to use a CIBIL or any of these mechanisms. So a top-class bank would go only to a certain set of borrowers, right? The NBFCs would then fill in a space which can be managed well, right? So you have to make sure that you have adequate capital and the adequate wherewithal to understand the ecosystem there. Say, I, for example, had once asked, this was one of the home finance companies. I asked him, he was an ex-SBI colleague of mine who was then MD of a very mid-sized NBFC home finance company. So I said, what is it differently that you do? You are also going to tier 2, tier 3, tier 4 cities. He said, number one, even if you have a branch there, your branch will never give a home loan to a borrower whom I will give. So I said, how do you manage it? It's mainly because they have devised a system in which we only look for papers. Today, GST, etc. is making it easy. But ours is a very structured, documented process, which feeds into, in the case of private sector banks or the good public sector banks today, feed into a credit appraisal, AI-led driven mechanism, and then we decide. But this set of people go one step beyond that, bring others into the credit fold, and play that role. Wherever things have gone wrong, we were one of the biggest lenders to the NBFC system also. And, I had the responsibility of directly looking into it. If you look at SBI was lending more than 100, I think. ILFS, DHFL, you've had now a Shrey, which has been taken over. And Reliance Cap is an altogether different thing. I'm not even going into that. Other than that, when ILFS happened, to my mind, I was looking for my 2.5 years in SBI with one default after another. There was only one other company which was promoted by a foreign investor called Altico, which had to have a resolution. Other than this, if you see, there were no major hiccups. Because, perhaps because of what Kamal is trying to say, that if you go cut your coat according to your cloth, and if you understand the ecosystem well, and then take the risks, you would be fine. Of course, during COVID, RBI, rightly so, has gone forward and given a lot of support. Now, how do we use this infrastructure that we have built and take them forward? There are one or two challenges which are there very clearly. How do they raise capital? Because ideally, I think the regulator is not very comfortable in then being deposit-taking entities.
Yeah.
If they are deposit-taking entities, then they should be like banks, right? And they should be subject to the same intense regulation. I think the first step that has come is you put them on the same footing as banks as far as intensity of regulation is concerned. With that ecosystem, now they have to carve out a very clear niche in the area that they want to play. It can be MSME, and I think to a very large extent, the entire financial system, both the regulators, the banks who are lending to them, they should be very, very supportive of this. They should not, for example, make the mistake. I think one of the issues why the pandemonium broke out was because of the mistakes we committed in the high value corporate and infrastructure lending, right? Which I think many of the distinguished panelists today have addressed by saying, how do we correct them? Your underwriting standards, SBI policies in the last 3 years have undergone a complete change in infrastructure lending. NBFC should not, for example, now suddenly wake up and say that, I will start lending to large corporates and stuff like that. That is not for them. But there is a huge gap in the bringing people into the net, whether it is a small, medium enterprise, a small enterprise, aspirational credit to people who are coming into the middle class. The banks are not able, even nimble banks like HDFC Bank and all, are not able or do not wish to get into that. NBFCs have to be guided to play that role. And I think they have a very, very clear role going ahead.
Yeah, so I think a lot of when we talk about differentiated, not banking, differentiated financing, there are already differentiated institutions in the system. And part of what Tamal talks about is the DFIs going down and banks taking up some of that. And there are very good, interesting questions in the way forward section to ask about where all this goes to. But I have very little time, and I have Mr. Anil Bhardwaj who wants to ask a question. So I'm going to give him his question, and then I'm going to come back and ask my way forward questions of all of you. So Mr. Bhardwaj, please say who do you have a question for and ask your question.
Thanks, Samirji, for this opportunity. I can see that I have not read the book as yet, but followed the excerpts. But I stand a convert, Mr. Tamal, and would lay my hands at the first opportunity. I have two quick questions. One is that keeping in view that RBI's record of supervision leaves much to be desired, and I understand you have described in detail the long history of weak governance. At the same time, the services meted out to the general public by the banks also remain pathetic. When in the eyes of the bank's customers, especially MSMEs included, RBI seems peddling bank's interest more than that of common man. This is the perception and experience of common man. In this context, do you see any merit in separating the monetary policy and the banking regulation functions of the central bank? That's the first thing. And the second is with regard to the credit rating agencies. In this whole context, their role needs to be probed. Why they are always caught sleeping? And we MSMEs face the brunt, more, because any borrower having exposure of more than rupees 5 crore is asked by the banks to get third-party rated by qualified CRAs. And when asked from the RBI whether it is mandatory, they conveniently say that it is not mandatory, but banks insist that it is. So we end up paying, through our noses to get a bad rating. And then have to face the same consequences of getting a bad rating. So the question is that why do we continue to have this unnecessary expense on our head, which is neither you can say beneficial to the borrower nor to the lender?
Well, Mr. Bharadwaj, to answer your first question, I think the bank's approach to MSME is changing. As earlier I had said that I think because it's a cash flow based lending, banks were not very excited about it. But whatever little understanding I have, and I'm seeing that banks' approach is changing, and GST is playing a critical role there because they can get data, they can, in terms of credit appraisal and risk management, etc., things are happening, and there's been continuous pressure by the government also on that front. And bankers are seeing the segment as sort of not a compulsion but a business opportunity. And I think you also have from the industry perspective, you also have the option of approaching NBFCs, and there as Mr. Basu was talking about, NBFCs can play a very critical role, is playing the smarter ones because their operational cost is much lower than the banks. Even the cost of fund, it could be, if you are a good well-run NBFC, it could be much lower because you don't have SLR and CRR and other compulsions. So at this point of time, I think it's an advantage NBFCs. Should the RBI's thing will be split? I'm afraid I don't agree with that. I think there is one particular report in the recent past which talks about Reserve Bank excusing Reserve Bank of India of many of its role, but I don't think that's the way it should be done. But RBI needs to be more proactive in inspection and other things. And Mr. Sudarshan Sen explained to it everything what needs to be done. One thing he did not say, I put it this thing, when particular RBI's weakness, if you compare with the smarter global banks, is this the market intelligence. I don't think Reserve Bank of India has this function at all in terms of market intelligence. Often it happens, a journalist knows more about a particular bank or an NBFC than the RBI knows. I think that's one area where our central bank is definitely lacks. It should do so. I mean, market intelligence is beyond keeping newspaper clippings. Actually, to have right kind of people at the right kind of places and continuously getting feedback. About the customer service, I think it's up to us to reject a bank if you're not. I mean, at least when it comes to the liability, keeping money with the bank, it's not only the interest rate, even other way the banks behave, how it behaves, because it's no more a seller's market, it's a buyer's market. I mean, that's that's why in 1990s post-economic liberalization sector opened up and all, because public sector banks were pretty complacent, and that's what we brought in the private banks to make it more competitive, and they run the risk of losing you and me as customers. So I think we have to reject them. We have to teach them a lesson if they are not doing their job properly. As far as rating agencies are concerned, I have a detailed chapter on that. Yes, I agree with you. I mean, things are not good. I mean, they are not exactly come up with glory, particularly two of them. And as you know, their CEOs had to go. There's investigation. SEBI pulled them up. And it's always happened post facto. Suddenly, our triple rated company overnight in the next 3 weeks, you will find that it comes down by 10, 15, 20 notches. Now, whether rating agency is sleeping, sometimes, yes, they are inefficient. Sometimes their officers are even compromised. So I have dealt with this in detail. Thank you.
Okay. Net, read the book. We have a short, about 10-12 minutes left. I'm going to ask 2 rounds of short questions. Please give me short answers. And in the next round, I'll ask even shorter questions. So this round, I want to ask all of you on the panel a very simple question. How do you see the future of banking, regardless of the extraneous factors? So don't think about how the economy will go or whatever. Will we have more banks? Will the demand supply match up? What's your wish list for what should happen? Who wants to start? Mr. Sen?
One thing is, Shinjini, see, even after RBI opened up the SFB and the Universal Bank windows on tap, there hasn't been a stampede in applying for bank licenses.
अरे लोग डरते हैं.
Exactly. No, so डरना चाहिए. The reason is डरना चाहिए because bank is a highly regulated business.
Yeah.
It's a highly leveraged business,
Yeah.
and it's not for the faint-hearted. And it's definitely so. RBI will be very selective, but some people are really scared right now. But to answer your other thing, well, the one thing I think bankers will be doing is that after their, I will say, the love affair with big ticket corporate lending has kind of turned sour now, on the rebound, they are increasingly looking at more diversified portfolios, looking especially, as has been mentioned, the SME sector and other areas, using fintech a great deal to try and recognize risk better. So I think banks are going to be more focused on where they lend. Everybody will not want to simply go and lend to everyone. I think there will be niches. Banks will look for niches because this reminds me, many years ago, I remember one MD of a bank on the telephone telling his friend who was an MD of another bank, "Acha, main 400 crore le lunga." I mean, this is like, I'm going to buy some cloth. You're buying cloth. Okay, I'll also buy some 400 crores. The syndication happened over the telephone without any much ado. So I think things have changed. Banks will definitely be more specific, and they'll be very, they will be very, I think the risk management is going to be really go forward in many ways. Yeah, I'll stop.
So those are great outcomes if we get better risk management and we get banks that focus on what they do better rather than just doing what everybody else is doing. So I think those are two great points. You did not say anything about what the central bank will do in terms of licensing or anything, but you said that the policy is available and people are they'll be careful and prudent. So those are three good answers there. Mr. Basu, I want to give Mr. Mundra the last word on this one.
So, there is a huge, what we call digital, and I am using digital in a very loose sense. It covers everything relating to the technological ecosystem, and it is transforming very rapidly. India, in many respects, is well placed. We sometimes get over euphoric, but still, the so-called India stack, early signs of the neobanks, the platforms, the collaboration that banks need to have with the fintechs, again, a very interesting thing. Banks which not only prepare themselves currently, but look also to the future, 3 years, 5 years hence, where I will be. It will be a constantly evolving thing. They are the ones who will stand out and do better. That is one thing. And this is across wherever they get their money from, deposit, or wherever they lend to. This is a broad.
You want to guess how many more banks we will have in the next 5 years?
I would think it is more important to have good quality banks rather than the number of banks. There are enough.
He's
banks
using Tamal is using that trick on me, the one that he used on journalists.
No. So
Yes.
I genuinely believe that the number is not important. There are some banks which are now, in the private sector, which can, these are old generation private banks, as RBI used to call them. They have now transformed themselves into a new generation private bank. I'll just take one example because they don't call themselves by their old name. Catholic Senior Bank, I keep seeing everywhere CSB, and I tried to find out. So apparently now they can do everything which any of the big 4 or 5 private sector banks can do. So there are at least 5 or 6 other banks who are at that very nascent stage, and there is no reason why they should not go up. And one other thing, because the book is all about the pandemonium and the collapse. And since you asked the question on future, infrastructure, because I was also heading project finance, so I feel passionate about it. Mr. Sen is 100% right. Everyone cannot do it. It has to be, but there has to be some institutions other than DFIs, because DFI we've had the past, government is now coming up with one very calibrated DFI in the right manner. But banks will have to chip in to support this. May not be all the banks, but certainly an SBI. I'm just taking, and maybe ICICI Bank, who have had past experience on this. They need, and they have already tailored their policy. Corporate banking now is about 33% of the portfolio of each of the banks. It's come down in the last 3 years from 50% to 33%. If India were to once again bounce back, and we are not in good territory, even before COVID, people talk of minus 23%. the year when we ended COVID, we were at 4.7%, 19-20 financial year. Without infrastructure lending, it cannot happen. And banks have to play a role in this. And that is my other vision for banks. Not all of them, but at least the 4 or 5 select banks need to be part of this.
And actually, Tamal does talk a lot about what are the various mechanisms that have been put in place, and some sort of green shoots of how that infrastructure financing, etc., will happen. But Mr. Mundra, I want to have your word on this.
Yeah, thanks. 3-4 very short answers. Number one, my sense is, as far as the banking licenses are concerned, both supply and demand both will be weak. I won't go into the details, but we know already. We have seen the recent papers, and we can sense that supply is going to be is not an open door supply. So that is one point. Second, the existing players, I think they have to accept and work with the reality that going forward, banking will keep on becoming more and more boring business rather than a glamorous business. And they have to, design their model to do business banking in a boring fashion. That is the second point I wanted to mention. Third point, I think any bank which creates a very successful alliances with the fintechs, I'm not trying to convert into a fintech, but create a very successful alliance with various fintechs would be winner in the long run. That's the third point. And fourth point I would like to mention, bank would have to change their business model. Presently, banks marry their assets till death do we part. I think they will have to move to originate and distribute model, and market evaluation of the market should be supportive of that model. So I think these are the 3-4 things I would like to mention.
Super. I represent the fintech industry at this point of time, so I do want to come back and have a couple of short questions on that. But Tamal, you do get to say your wish list. I for people who haven't read the book, because
not wish list. I just want to not repeating what they said. One thing Mr. Sudarshan Sen started saying that phone mein bolte hai tum 300 crore le lo. That's exactly what I was talking, the brotherhood banking. Okay. Anyway, so what I find is this: while the banking system is much stronger than what it was in 2015 during the AQR time, I think right now our Indian banking system probably is facing a sort of, well, I'm not sounding alarmist, but sort of existential crisis, because the two headwinds at this point of time, one is the digital disruption, and second is the increasing disintermediation. Okay, you are the Amazon and Google Pay. They are raising deposits on behalf of banks. So we may end up seeing that, because many people who would be keeping money on those platforms, even though these platforms are doing on behalf of banks, but probably they will think only this platform will be, they are keeping money on that platform, and probably the interest rate they will set will be the benchmark. Otherwise, other banks, if they can't match that interest rate, they will not be able to get that kind of the deposits, etc. So what we are seeing is this is a sort of, as I said, at least not everybody, but some of the banks probably find it difficult to move ahead. So I would like to believe, along with opening, giving up the new licenses, it's time that Reserve Bank of India also think of certain exit policy through merger, through acquisition, because the way things are changing, as I said, the existential crisis and the headwinds of market disintermediation and the digital disruption, every bank cannot survive. So we need new banks, and we also need a sort of exit policy.
Fantastic. So as someone who has also seen the banking system since 1990 as a central banker, as a consultant and various things, and now part of the fintech industry, I do agree with you that one of the things, a little bit more leeway on mergers and acquisitions and consolidation and things like that would probably help. Also, from the fintech industry, one thing every time I talk to senior people, there is always this expectation that somehow banks will be able to use fintech to create their betterment and the betterment of their people. I just want to say that the nature of technology is to move forward, and it's very hard to go backward. So somewhere just marrying that the two technologies, because I've been in city, we tried to do, we did a card, we launched a card with Paytm, and I had worked in both organizations, so it was easy for me to bring it together. But I can tell you that even from a risk management perspective, etc., you can make it work. But the technology alliance just is extremely hard, and that's the experience that any bank will tell you when they try to do this. And that's a subject for a very much longer discussion. But I do hope that there will be much more supply and much more differentiated supply for different type of players to succeed. One last word very quickly from everyone. From my side, it's best of luck to the banking system and to the book and to the readers of Tamil.
Okay. No.
अब जाते जाते तमल को बोल दीजिए अच्छी किताब लिखी है.
नहीं जाते जाते तमल को बोलना है. What you have actually, in fact, this book which you have written is slightly different from our earlier books in terms of size, in terms of the whole presentation and flow. But I forget about whatever we have discussed. Obviously, we are designed to put you questions when we are in the panel discussion, but that doesn't take away the respect for the good work of writing you have produced. I must say this book really can be used as a reference book for many sections of the society, for the researchers, for the students, even for the bankers, and many right lessons can be drawn. So I think compliment to you, and keep on doing the good work. And what you mentioned initially, seriously think about writing a book on the great Indian banking comedy.
Thank you.
And trust bankers, Tamal. Trust bankers.
Okay.
Yeah, so from my side, all the best to the book. It is eminently readable. He now has competition from non-journalists. Some of my senior colleagues have now also started writing the way he is writing. So it makes it even more interesting. And on the banking system, I think while I do appreciate what he has brought out, and a large part of it is for reflection, I have been an incorrigible optimist throughout, and I believe there is no scope for gloom and doom. Having specifically compared, seen India in comparison to places like Japan, where I have worked, I don't think if the Indian banking system goes into a problem, it will be for larger reasons. If we have an economic problem, then it will be reflected in the banking system problem. Otherwise, banks will not come in the way of India's progress.
Super. Mr. Sen?
Tamal, again, congratulations. You have written a 500-page book. So I had to read it in about 5 installments or more. And each time I finished one installment, I was itching to come back to the book. That's not a feeling I have with many books.
Super.
So I really enjoyed it. And on finance in general, I think the last word has not been spoken. There'll be plenty more for Tamal to write in the years to come. All the best for that.
Thank you, everyone. Mr. Kocher, all yours. It's been a wonderful discussion. Thanks to everyone for being here. Thanks, Tamal, for writing this book and bringing so many people together.
Sanjini, just give me 30 seconds to thank all of you, Mr. Kocher, for organizing this. It's a real pleasure and privilege, Mr. Kocher, and Mundra Saab, Mr. Basu, Mr. Sen. Thank you for your leniency and affection, if I may say so. And I repeat, I'm not an expert, but I have no agenda. So read the book and find fault with me, with my writing, and draw my attention. I will correct the course for sure. Thank you, sir. Once again. And Sanjini, you are brilliant as a moderator. Thank you. Mr. Kocher, over to you.
Well, thank you, everybody. One television anchor joked with me that how do you manage 90-minute panels? It's a thesis. I said, it's very simple. We pick up interesting books. So where those 90 minutes flew, I think no one realized that. And even 90 minutes are a little short for this kind of a discussion. So thank you very much for being with us this evening. And thank you to the audience. And we look forward to have you join us for the next edition of the LITFest discussion, which is tomorrow. Thank you very much.
Thank you.
Thank you. Thank you. Stay safe, sir. Thank you.
Thank you.
Thank you.
Thanks, everyone.